A terrific Thursday morning to all. Paul Walton with Mortgage Market Insight. Let's take a quick look to where we're actually at this morning. Once again, the 3rd, which was Tuesday, we had a whipsaw once the FOMC released news, and a lot of market emotion had dropped the bond market almost 100 basis points. Next day we actually opened up, which was yesterday, at 102.44 and then closed at 102.63, seeing some positive improvement. And then today our opening at 102.84, which is very positive because we're back up in this trading range up in here between 102.80 and then 103. But we've lost a little bit of ground, so we're sitting at about 102.72 at this point in time. So let's take a quick look to what trading looks like this morning. Our opening at 102.84, scooting sideways at about 102.72 at this point. We need to close above 102.60 would be fabulous. So as long as we can stay above 102.60 and say close above or around 102.80, that would be great. In terms of morning economic news, we had the initial jobless claims come in at 357, and forecast was 353. If we go back to last year, April 7th, so that was sitting at about 382, and it kind of spiked up. But at the same time, as you can see, we've actually, since this year, we've stayed pretty low, and the chart actually does give a little bit more clarity. Also, Challenger reported that there was going to be less jobs, so lost, and the lowest since May of last year. So good news, and the equities markets are a little concerned with the Eurozone coming back up again. So once again, let's look to close above 102.60 and 102.80, but this is a lesson, do not try to time the markets at this point. It can whipsaw and change instantly on investor emotion, and this is what actually caused it. So on that note, have a fabulous Easter and a great weekend, and I'll be back to you next week.